Elon Musk said on the last earnings call he believes Cathie Wood's analysis on Tesla and the way that she values Tesla is the best way to value Tesla. Well, Cathie thinks Tesla stock will hit $2,000 per share by 2027. Presumably, from what Elon said on the last earnings call, he agrees with that statement. If you're unfamiliar with simple math, much the same way the bears are, that's about 3 years from now. So you would imagine that things need to get moving over the next couple of months here. And they could do exactly that in a much bigger way than you might expect. According to many people on Twitter, if you were one of the first people to place a reservation for the Cybertruck, you're starting to get these confirmation emails. Most notably, you can't change any of the prior details anymore, and it looks like that tri-motor Cybertruck is going to be the first one that is delivered. If we also just take a stroll through Twitterland or Xland, I'm not exactly sure the terminology anymore, you could see a couple Cybertrucks on the back of a pickup truck. Again, you can assume these are set for some kind of final destination. Maybe not to customers, but to some kind of facility to get ready for these deliveries. And this pickup truck, let me roll the clip, is nothing special. It's just an average pickup truck. So this is very encouraging. And I think a lot of people really underestimate what the Cybertruck will do for Tesla. Not just Tesla as a business, but also Tesla's stock. Elon Musk has created Tesla in a way that he is the brand of Tesla, at least in the beginning. He would go do interviews, he would do different things to spread awareness about Tesla. And a lot of people hated Elon at first. And that grew Tesla's business. That created more people seeking Teslas and ultimately buying a Tesla. Well, the Cybertruck's going to do that on steroids. No matter if you love it or you hate it, fact of the matter is, the Cybertruck has over 8 times the pre-orders as the Ford F-150 Lightning, and a lot more than that of the Rivian. People tend to like it. But the Cybertruck will do one thing that really stands out to me. It will drive your attention to the vehicle, no matter what it is, who you are, no matter what you're driving. You're going to look at a Cybertruck. If you don't know what it is, you're going to say, what in the hell is that? Maybe it's a good thing, maybe it's a bad thing. But that's like free advertisement everywhere Cybertruck drivers go. Even if ordinary individuals don't get a Cybertruck, this could lead to more sales of other Tesla vehicles. It's pretty simple. The more people you reach, the more sales you get. That's why people advertise. Tesla happens to offer a product called full self-driving. To one extent or another, if you're a long-term investor in Tesla today, you're betting that full self-driving becomes bigger in the future. That's where Tesla's profit margins are expected to come from. And that's why Tesla could be bargain bin cheap today and $2,000 per share 3 years from now. It revolves around full self-driving. And Elon's strategy so far in 2023 has been sell more vehicles, sell more full self-driving equals more profits. Very simple, kind of 6th grade, maybe 4th grade equation. Obviously, full self-driving is not perfect, as we have seen time and time and again, and especially the bears like to point this out. Full self-driving does whatever it wants sometimes. And I think we're going to see some massive improvements here soon. And a lot of it has to do with large language models. In the communication between your vehicle and something along the lines of a Google Maps. Maybe even a partnership could come out of this. Google Maps knows when there's a red light. It knows where there is a stop sign. Instead of Tesla just relying solely on visuals, when visuals can be quite deceptive, as you know. Sometimes you get a red light that looks slightly yellow. Sometimes you get a green light that looks yellow. You can't always drive off of visuals. There's those instances where that just won't work. You need to incorporate the two. And I think that is what Elon has figured out. And I think that's what they're currently working on. Since the revolution of ChatGPT has been able to affect so many industries so far, it only seems right that this enhances full self-driving and could help it to go to the next level. I mean, besides these random red lights full self-driving goes through or stop signs, it's pretty good. There's not too many other areas where it would need improvement on to get approved through the regulatory bodies. That's the biggest hurdle with full self-driving. How do you go from level 2 to level 4, level 5 in the government's perspective? Because the government ultimately makes the final call. Some of the bears will tell you Waymo and Cruise and these other Robotaxi services have it all figured out, and they're going to be better than Tesla, and Tesla's never going to make it, and these other guys are. That's the farthest thing from the truth. Sure, Robotaxis exist in certain cities, but it's impossible to map out the entire United States and have it be level 4. They've been working on San Francisco for 10 years now, and it's recently gotten to a point where you have Robotaxis. Tesla's taking the long approach on a massive scale. Once full self-driving is actually solved, that's when we can talk about Robotaxis as a whole. I don't think Robotaxis is necessarily necessary to get you to $2,000 per share, or at the very least $500 or $1,000 per share. It's all about full self-driving and actually selling the software itself. See, full self-driving has about 90% net margins. Sure, there's cameras involved. Sure, there's software maintenance that is involved, but it's about 90% net margins. So that means your valuation for Tesla, when they start selling more vehicles next year and the year after that, is going to look a lot cheaper. A lot cheaper. Elon Musk also said on Tesla's last earnings call that they are in talks currently to license their full self-driving to a major OEM, especially once these problems get solved of running through red lights or random stop signs. That's going to be a lot easier of a task. And I'm sure there's going to be tiers to this, or a subscription model, or maybe a more basic kind of software. There's going to be differentials, I'm sure, from a Tesla's full self-driving capabilities to, call it, a Ford F-150 Lightning's capabilities, but this could also be another lucrative source of revenue and ultimately bottom line profits for Tesla. Cathie Wood assumes in a bear case outcome, Tesla could deliver 10.3 million cars by 2027. In the bull case outcome, Tesla could deliver 20.7 million vehicles. So for my rough estimate of what FSD could really do to the bottom line, besides just the auto margins, you could go a lot deeper into this, but I think the real value, when you're talking about Tesla going to 1,000 or 2,000 or higher, is really an FSD. So that's what we're going to focus on here. I'm going to assume that Tesla delivers around 4 million vehicles, just 4 million vehicles in 2025. This would be roughly 3 million for 2024, roughly 4 million for 2025, which this could scale way faster than this, and likely will. Well, if 10% of individuals in 2025 get full self-driving on 4 million vehicles, well, that's 400,000 vehicles that would get full self-driving in 2025. Well, I want to be a little bit more conservative with these estimates. So I'll go ahead and times this by $10,000. Let's say full self-driving goes from $15,000 to $10,000. That could add $4 billion to the bottom line, just as profits, not including the auto business, not including energy storage, not including anything else. This would be massive. Massive for Tesla's business. And this is on a bear case scenario. like a really bear case scenario. You don't even want to get into the bull case. Then it's very logical Tesla could rally to even higher potentially than Cathie Wood thinks of $2,000 per share by 2027, if she's correct. ARK Invest and Cathie Wood believe the Robotaxi, it will be coming online by 2024. I would bet that that's not correct. Probably 2025 or 2026 at the bare minimum. In 2024, if full self-driving gets submitted for level 4 approval through the government, that would be positive. You're looking at 2025 or 2026, in my personal opinion. But the total addressable market of the Robotaxi, not including just full self-driving, can be on an epic scale. You're talking about software purchased by Tesla drivers, which could be $10,000, $15,000, it could be $5,000. You could get a deal on full self-driving if you license and probably have a contract with Tesla to do robotaxis. There's so many different avenues this could go down, but every one of them leads to massive profits for Tesla. Imagine this. Imagine if Tesla got 30% of your robotaxi revenue, Tesla owner got 70%, and Tesla did nothing for it. This would obviously be massive for Tesla. So far in this video, we've only talked about the car business and the robotaxi business and full self-driving. That's not to mention energy storage and energy deployment. Cathie Woods and ARK Invest also expects this could increase by 15x by 2027, which sounds pretty reasonable and, to be quite honest, moderate considering some of the growth rates that we are currently seeing, almost 200% in this sector, with no signs of slowing down anytime soon. So why could this all be so important today? I'm sure this is not a new concept, but the markets are forward-looking. The markets were a lot more forward-looking in 2021. That's when Tesla stock hit a high of $414 per share. And why was this the case? Well, interest rates. Interest rates, it's like a push and pull effect on where people invest their money. When interest rates were, and bond yields ultimately, were 0.5% in 2021, well, buying a bond was out of the question. So investors are willing to pay a little bit more, and a lot more, maybe I should say, for future growth. Your growth stocks become more valuable. And that's what we've seen over the past 15 years or so. Now, markets, they're forward-looking, but they're not 10 years forward-looking or 5 years forward-looking when interest rates are 5%. And there is an alternative. There was a saying for the last 15 years called TINA. Kind of like tuna, but with an I. There is no other alternative, is the saying. And that was because there wasn't. Where else would you invest your money? It's not in bonds. It's not in corporate debt, which yielded you, 2%. That didn't make sense. It was in growth stocks. And that's why Tesla could actually start to benefit from all of this information within the next 3 to 6 months. Fed Jerome Powell outlined today that they may or may not raise rates at the next meeting, and that far before inflation gets back to 2%, the Fed will cut rates. Rates don't need to stay at 5.25% if inflation is 2.8%. Well, let me tell you, inflation is 3% on a year-over-year basis. Once your core inflation metrics start to fall, as I expect they will, pretty soon, well, that's going to mean rate cuts could be coming a lot sooner than most of us expect. And with almost certainty, as long as inflation does not reaccelerate within the next 8 weeks until the next Fed meeting, we're not going to get any more rate hikes. And that means valuations can go higher, especially in quality stocks. There's always going to be this backdrop until we get better GDP and the economy really troughing out and leveling out and starting to grow again, that maybe we get a recession. After all, it got pushed from 2022 to 2023, and now people are talking about this infamous recession in 2024. It may or may not happen. But in the meantime, when interest rates fall and bond yields fall, as investors start to position their portfolios more in growth stocks, well, they still want to be defensive. They still want to be in quality companies. And that's where I think Tesla could really shine, because Tesla has proven itself over the years. And I guess if we have to point out the obvious, when interest rates fall, that means we're not going to get as many price cuts, if not any more price cuts from Tesla. You're likely to see stronger demand and an overall healthier credit market, which is exactly what you would want to see with Tesla. That's why in 2021 and even 2020, Tesla raised prices. Well, they haven't been able to do that because interest rates have been high and the affordability of vehicles has been a lot worse, even though prices have gotten cheaper. So a lot of analysts are even speculating that you could see a price hike once you start to see price cuts. And for your short-term investor, short-term analyst, that's great news. But analysts will be forced to, again, think with a longer-term vision, the next 24, 36, 48 months down the line, once rates really do start to fall. So by 2024, things could get a lot more explosive for Tesla stock. And I think if you are a long-term investor and you want more position in Tesla, well, right now is probably one of the best chances that you will have to actually do so. So if we try to summarize this video, Tesla's business has grown over 100%, top and bottom line. Deliveries have grown about 100% since 2021. And Tesla's stock has not reflected that, due because we first had an inflation problem, then we had a Fed problem, and the whole time we've had recession fears sprinkled in here and there. And when rates are higher, investors don't want to pay for earnings down the line. They don't want to pay for growth down the line, even if that growth could be massive. Investors had an alternative, which was bonds. When bond yields pay you out 5%, nobody wants to touch that long duration growth stock, even if it is high quality like Tesla. So I think over the next coming weeks and coming months, the story for Tesla is going to get a lot brighter in investors' eyes, and more money will start to flow into Tesla as your future earnings become worth more from investors' point of view. But don't just take my word for it. 2027 is 3 years away, and Cathie Woods expects Tesla stock to be somewhere around $2,000 per share. Odds are most of that does not happen in a year or even two. You need to start seeing some signs of getting to those prices. And likely these things that I have mentioned here in this video will be a big driving factor to send Tesla stock to the next level, to all-time highs, and then to 500, then to $600+ per share in 2024. So that is going to do it for this video. If you learned something or you like my perspective, or at the very least you want to stay up to date with everything going on with Tesla as well as the broader markets every single day, hit that subscribe button, hit the like button, and most importantly, enjoy the rest of your day, and I will see you in the next one.